Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm a KKM Financial. We're looking at the VIX cash trending lower here, right around 2070. That's down on the session at the low end of the range for today and also the low end of the range for 2021, as we are now seeing realized volatility coming in quite substantially week over week. 10-day realized volatility down from 22 to 16. 30-day realized volatility holding pretty steady right around 15.5. When you look at the at-the-money March straddle on the SPX trading at around 16.8% implied volatility level, really that's not too much outside of what the market's been realizing on a daily basis over the last 30 days. So when you look at the roll market, let's point that out as we move towards expiration. Remember, Monday's a holiday, just one day of trading left for February after today, and we're seeing a very steep roll market, $4.20 to be expected as that front month futures being pulled lower. March, April roll, $2.15. We're seeing that starting to widen out this week as well. But what's really interesting is the April futures through the rest of the summer are all higher for the week. So we're seeing, again, that curve shifting higher, but then very flat and maintaining that very flat status from basically May through the end of the summer. Looking at VVIX, measure implied volatility in the VIX options, 120. Now, we are seeing that shift higher throughout the week, and I think it's really a culmination of the fact that we're rolling into a new cycle, and I think the expectations are that those futures are going to continue to shift quite dramatically here as we move into this new cycle. Looking at activity, a lot of activity in February to be expected. The 22 and 20 line, so basically at the money. 25 line out of the money calls as well. But you look at March, we're looking at some at the money puts, those 26 strike puts, 17,000 of those are traded. But the big trade is really in May, where we're seeing a lot of activity surrounding basically a butterfly or skewed flies, with the 23 strike being the middle strike. But there's a lot of activity there with setting up for some flies, pushing back down potentially to that 23 level. Next week, I want to point out we have expiration. Keep that in mind. We also have a lot of data coming out, highlighted by some inflation data, as well as housing data, Fed minutes, and then the stimulus negotiations as well. So I think those are all going to play into the vol structure as we move into next week.